great to have you back. And, I just want you to complete your answer to Nikunj's opening question, where you were essentially talking about, where do we go next from here?
Yeah, we will continue the journey. That's what I believe about Indian markets and Indian economy. So as I was trying to tell, we are changing structurally, and this is unprecedented and historic. So people are trying to underplay this. We have a very stable and different politics today. The policies are being formed, focused on long-term growth for the country and for, reduction of poverty and corruption. So all these things have got a huge economic impact, which will take our growth into 8%, 9 and 10% maybe in some of the coming quarters as GDP growth. So, and this is going to sustain for many years to come. So that is why I found this structural change happening in India, economic structural change happening in India way back in 2013, before the general elections. And I was expecting a strong change in the politics of the country. So that has happened, and I strongly believe, more and more people in India, they are getting knowledgeable, and they are becoming good citizens. So this theme of development will continue. So if that continues to happen without any political interruptions, I am telling you, India has long way to go, and our economy has to grow from this $2.35 and $2.4 trillion to $4, $5, and $6 trillion in the coming years. And the companies, the entrepreneurs in India are going to create huge wealth, and in turn, the equity investors are going to create amazing wealth. Already, if you see last 3-4 years, the massive wealth is created by equity investors, which is not really reflecting in the Nifty or Sensex. So, especially those who firmly believed equity investing is not risky. Other people who misunderstood equity as a risky thing, they lost the opportunities. Can you hear me?
Yeah, one of the reasons why equity is a preferred asset class is because there are no taxes. Yeah, we can hear you. My follow-up question would be that I'm absolutely with you that ultimately stock markets will be reflecting the underlying economic momentum and the underlying economic growth. But another important aspect for Indian stocks is that there are no taxes if you hold stocks for more than 1 year. If you are an SIP investor, the choice of investing in real estate and gold right now is not there because those asset classes are not giving any returns. If any changes to the long-term taxation structure is done in the budget this year, could that lead to a sharpish correction and a strongest and a strong knee-jerk reaction in the stock markets? Because as of now, if you talk to anyone, the reason why they want to come to stocks is because stock markets give you better return, and also you don't have to pay taxes if you're a genuine 1 year plus investor.
Nikunj, I strongly believe the course of Indian equity investing in the markets will not change at all. If some change happening in the long-term capital gain taxation. For example, if 10% tax is imposed on long-term capital gains, nobody will stop buying equity for that. And this will not have any crash in the market. It's just it's not any rational to believe that if there is some tax is levied on long-term capital gains, the markets will crash. It is absolutely wrong. There may be some monkeys doing something for the next 48 or 72 hours, and there can be some volatility. Otherwise, market will not change its course of direction.
Porinju, hi, good morning, and thanks so much for taking time out and celebrating the 11K mark with us at ET Now. Porinju, I remember 1,000 points back at 10K when we were chatting with you. You've always believed that it is the small and mid-cap stocks where money is to be made. For the next 1,000 point journey, would you say that it would be the small and mid caps which would contribute as much, or would you say maybe now it's turn of the large caps as we've seen in the recent past?
Aisha, if you see the last many decades, whatever happening in the markets to the Nifty or Sensex, the small caps and mid caps, selective ones of them, they are the biggest wealth creators in India. Some of the small caps have become, not some of the small caps, a large number of small caps have become mid caps, and large number of mid caps have become large caps, and some of the small large caps have grown into mega caps. So this is a process in the market. Actually, investor need not worry about the size of the company. A lot of people misunderstand me. I am talking about penny stocks and small stocks. I talked on your channel when Reliance, 1.5 years ago, when it was around 800, 900 rupees. It created huge wealth from 2,80,000 crores market cap. Today it is, I think, over 6 lakh crores of market cap. So it is not about the size of the company. It doesn't matter to the investors. And this segregation of small cap, mid cap, large cap, I don't believe in that. It's only misleading to the investing community. Look at Indian companies which are in the growth path, which can grow at a much faster rate than the economy and create wealth for the shareholders. Let us approach the investing with an open mind. Why should we have constraints? Some people talk, liquid stocks, illiquid stocks, and even some academicians started using Bangar Kap kind of words, to mislead people. Actually, let's be open-minded and, use the common sense and wisdom. I'm telling you, our Indian companies, a lot of these mid-cap companies are going to become large-cap companies in the next 5-10 years. So that is where you create 5 times, 10 times wealth. Such opportunities are still immense in the market. And I would tell you, the market is not in some bubble territory or unhealthy kind of systems today. Market is going very healthy. See, last week, there was significant correction in the smaller companies. Actually, it was required. A lot of people were going complacent about it, going chasing the stocks which were going up. So that kind of sharp corrections keeps the market healthy, and our market is very, very healthy for stock picking even today.
You rightly pointed out Reliance being one such case in point, Porinju. The other one, and this I'm freaking up from your tweets itself, you talked about 3 hotel stocks, the way they've gained almost about 150% in the recent past, the likes of Indian Hotels, Royal Orchid, or for that matter, Oriental Hotels. Are these kind of pockets some that you're reiterating towards, that there is still value on the table and people can still look at some of these names?
Aisha, suppose a group of stocks, industry stocks goes up by, 100%, 200%, then people come in a big way. That is not really required in India. We have got so many verticals, so many of segments. So let investors, especially small investors, look at those underperformers, which are yet to move. Now, hotel stocks, I identified at a very good time, maybe one year ago, 1.5 years ago. I was very bullish looking at their asset quality, their assets and, operational assets. And the underpricing happened in the industry. Maybe these stocks can still go up, but smart investors should look for the next set of companies which are still at an inflection point. Even Indian Hotels kind of stocks, I am very bullish even from these levels. Of course, I am not holding the stock. So these stocks, if it is much better managed, actually Indian Hotels was mismanaged by Tata for the last 20 years. Otherwise, it would have been already 3-4 times of current market value. So if it is better managed by the new management or whoever, this company can still double from here in the next 3-4 years' time. I'm not holding the stock.
Okay, let's leave the hotel stocks aside, considering they've already seen a mammoth move. Where else do you find value in the market right now?
Okay, as a segment, as a vertical, I would say I had recently indicated about this. Tata Group is changing significantly after Chandrasekhar has taken over. And Mr. Chandra is doing an amazing job in my knowledge. I think he is exceeding expectations to a big extent. The way he is looking into every segment, every company, and interacting with the CEOs, and I can feel that they are looking at profitable growth. The earlier motto in the Tata Group 10 years ago, 15 years ago, it was about going global. You go acquire businesses and grow big. So that theme has given a setback to many of the companies in the group. Now things are changing. They're trying to disinvest, which is not the core business, or focus on their strength in each of the segment. So I would say some segments, now consumer, it already started with the Tata Global Beverages and Tata Coffee kind of stocks, even some part of the Tata Chemicals. There can be infrastructure and, segment for the Tata Group, which I indicated recently. There is an unlisted company. There could be something happening in Tata Power, Tata Projects, which is unlisted subsidiary, and TRF, Arts and Engineering. There are a lot of companies in that segment. None of them are well organized, not well managed too. So if Tata Group want to keep this vertical with them, they will be looking at growing it big, consolidating and restructuring all these companies together. So in that case, I think there will be a lot of wealth creation in that pocket. I'm not recommending any individual stocks. Look at the infrastructure business of Tata's there seems to have, there was some indication in the public domain that they want to grow big in that sector.
No, absolutely. Even on the commodity side, we've seen Tata Steel contribute 36% in this move, Porinju. I want to particularly ask you about some of the large cap names, because I know we talk a lot about mid caps and small caps with you. Tech Mahindra has made a spectacular move, 46% in the last 1,000 points. You've had an ICICI Bank which has moved, an Axis Bank which has moved. Now, these are stocks from a valuation standpoint which are trading at a discount to their peers within the sector and to the index as a whole, but despite being index stocks. Do you find value here? Do you think that in this index up move, it's now the undervalued index names which will find interest?
These are very quite large businesses, and to be very frank, I'm not competitive enough to analyze this or reply to this. My strength has been mostly into the deeply analyzing some of the smaller companies, finding the inflection points of those companies, and as multi-baggers, identifying them as multi-baggers. That is a very special season, and it's a lifetime opportunity in this country for investing community. Identifying those changing profiles of smaller businesses with the relevant business model, which can grow much bigger in the given economic environment. So that is what I think small investors should look at, and look for picking stocks. In the course, if you find some of these companies are very illiquid, don't take it as negative. Small investors somebody want to invest 5 lakh rupees. I have heard such people talking, oh, the market cap is only 1,000 crores. I don't want to buy it. And he want to invest only 5 lakh rupees. So there is a lot of myth and misunderstanding among the investing community about value investing. Because I know a lot of them may be academically going by the certain principles. So they miss out on the real pulse of the market and missing out on the opportunities.
So, Porinju, then two themes where perhaps you could be finding value in the broader markets. You touched upon infra. Now, the government in the upcoming budget is going to push infra in a big way. So, any areas of interest or ideas that you're particularly evaluating from that standpoint, where the fillip will come in through government's increased spending? And secondly, the rural economy. Anything related to that theme that you like?
See, in the infra sector, I think if you look at the government spending and the upcoming projects, the larger projects and government's vision, I think the railway stocks haven't moved up much. Even the TWL has moved already a little, I think 30–40%. The Texrail is almost there, the price which was the same. I'm holding both the stocks, and they are not big performers. But I feel there can be, game-changing kind of environment or development for these companies going forward. Looking at the big picture, the way government is planning to transform the railways, which is a huge task. It's a very, very large organization, and we need to upgrade, and we need to spend huge money on railways because looking at our demography and the way we can develop it for the economic growth. If railways and the seaways, our coastal seaways, are properly managed, that can make our Indian economy grow at 2% higher. That's the kind of opportunities we are sitting on, which needs a large amount of capital outlay. And I think the biggest impact, biggest benefit India is accruing from the recent reforms. Our tax collection, forget about this month or last month, whatever happened. I'm telling you, in the coming years, you will see significant increase in the number of taxpayers and the amount of tax being collected by the government. That is something, it will surprise most of the economists. And so we can even afford to spend money on such important projects. So look at companies which are catering into those aspects. Rural economy, of course, I remember I used to buy DCM Serum long back when it was 50–60 rupees. So there are only very few companies which you can, see strong numbers. But let the investors be watchful. Many companies will emerge in this sector. Now, there is a Jain irrigation which has already moved up. There is something like, I think Mahindra is holding some stock called EPC Industries. So there are small companies. We don't know. Some of these companies can come up and they may do large business because there is opportunity out there in the coming years. But I don't want to tell any small stocks as a recommendation. because, some of them are very liquid. Some of them there is no visibility at this point of time. So in some of these cases, investors have to take a chance. They have to take a calculated risk going forward. Then only there is multi-baggers.